Hello and welcome to the Morningstar series, Why Should I Invest With You? I'm Emma Wall and I'm joined today by Liontrust's Olly Russ to talk about European equities. Hello, Olly.
Hi there.
So you said to me just now that you think the world, specifically in Europe, is in a better place than it has been for quite some time. What did you mean by that?
Well, of course, everyone knows about the great financial crash or crisis of almost 10 years ago now. The US and Europe were caught up in that, but perhaps forgotten is just how well correlated before that US and Europe were. Since that time, of course, the US has gone on to all-time earnings highs, but Europe hasn't, because as soon as we came out of the great financial crash, we went straight into the Eurozone crisis, which was linked but not quite the same. It's only really over the last year or so that we finally emerged from that Eurozone crisis with really the Italian banking crisis that never quite happened. That was really probably the last aftershock for Europe of the crash, and now we're beginning to get out the other side.
And what about fundamentals? Because for a while, not only was the economic picture looking a bit clouded for Europe, but earnings were lagging as well. But that has started to change, hasn't it?
Last year was a fundamental change in trend for European earnings. So before that, for the previous 6 years, really, analysts always expected double-digit earnings growth. But by the time we got to the end of the year, we had nothing or less than nothing. So really, even now, European earnings are quite a long way below their prior peak that we saw in 2008. But last year, there was a fundamental change in trend. We got almost double-digit earnings growth out of Europe, which is almost unheard of now, and it looks like we might do almost the same again this year.
Not to dwell too much on the macro and the negative, but we're very obsessed here in London about Brexit and what the implications are going to be for the UK. But of course, Europe does an incredible amount of trade with the UK. It's not just Europe, not just the UK that's at risk from the Brexit fallout. As a European equities manager, are you concerned by, if we have our worst case scenario, how that impacts European companies?
In aggregate, there's quite a bit of trade, obviously, between the UK and Europe, but it's not that significant for most European countries, apart from maybe Ireland. So I don't think it's going to have too much of an impact. And I think the company's belief at the moment is that things will carry on pretty much as they are now, realistically.
So economy's looking better, Brexit's not a concern, earnings are rising. What else is there to be positive? Are there particular pockets where you're seeing great opportunities?
At the moment, in terms of valuations in the market, I think there's been, over the last really decade, a very strong run for growth over value, which we've seen across markets. And the question will be, when does that start to reverse? When does value come back into favour? And it's a big question for us, of course, on the European income side, because we do have a value tilt, very much so. Financials, big part of value in Europe as well, and a big part of our funds. So they're looking particularly cheap at the moment, a bit unregarded, perhaps not quite so glamorous as some of the tech stocks that we see in the States, but actually phenomenally good value.
Quite sensitive, though, financials to interest rate movements, not just in Europe, but of course over in the US as well, because companies are global. How much does that sort of play into your analysis?
They're very well correlated, actually, with the direction of US interest rates, 10-year in particular, perhaps more so even than the European equivalents. They're very sensitive to what's going on in US rates. We think the direction of US rates from here, obviously, is starting to drift higher now. I think people have got round to the idea now we're sort of 3% and just briefly above 3% on the US 10-year. People can see the direction of travel. So that's clear in America. Isn't so clear in Europe. Really, rates haven't gone up much at all, if anything, this year. But by the autumn, of course, the ECB will wind down its QE program. It's one of the last still going. The Americans are doing quantitative tightening effectively already. So we don't know what impact that's going to have in Europe, but probably volatility will go up, but also I think yields will go up, government yields, bond yields generally.
Olly, thank you very much.
Pleasure, thank you.
This is Emma Wall for Morningstar. Thank you for watching.